Hey everyone, I wanted to drop a video on this crazy, crazy day that we had today. So we'll see that it was a bit of a kind of a tale of two different kinds of markets. But initially, of course, we had this sort of almost, four plus percent sell off in the pre-market on the Nasdaq, which we haven't seen in a very long time. Even early August wasn't really much worse than that. I think we were sort of around 4% for the S&P, maybe a little bit worse for the Nasdaq. But this morning, of course, it was DeepSeek, this Chinese AI, much, much cheaper, cost apparently about $6 million to develop, extremely high quality. So this really put the fear into people invested in Nvidia, because Nvidia, being sort of the chief picks and shovels maker in this industry, really providing these GPUs, all this technology. Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. For people to develop AI, all this money, this capex that's being put into the sector, Nvidia is kind of hoovering up a lot of that money, and people are sort of going, well, is that going to be necessary, right? Are people going to sort of catch on to the fact that this might be able to be done cheaper, et cetera? So this was pretty big. And even Nvidia came out, you could tell it was just heavy all day. It barely bounced around 135 in the morning pre-market, and it just got worse and worse and worse all day long. And even Nvidia said it looks like an excellent advance. So it'll be interesting to see if Jensen comes out and maybe tries to support the stock a little bit over the next couple days. But this was a little bit of a shocker. And so, of course, we saw this big sell-off. We had, pretty ugly pre-market, came down. Here's your SPX daily. And we came right back down to this breakout spot here. We kind of sliced through that 9 EMA, which you expect is going to happen on really, really big news. We have this sort of coming through that 50 and then touching down on that 20. Now, the 20 crossed below the 50 back here, so that's not a positive thing, but you have to admit this is still a very, very positive looking chart. And of course, we bounced off of that. If we look at the weekly, we're still very much intact based on this little channel, this downward channel that we've pushed through. So overall, I think it makes sense, particularly if you look at it from the standpoint of a lot of things actually did very, very well today, right? This was not that bad a day, because it was quite localized, and not even all of technology. Look at Apple did really, really well right from the outset. They did fantastic. It was a place to hide, beautiful balance sheet. Everyone plowed right back into Apple and out of sort of the high flyers, Microsoft with OpenAI. Amazon came down a little, hit 225, but came all the way back to actually up on the day. This was taken pre-close, so it was actually up on the day. Google took a little bit of a hit there, and we're going to look at Meta in a moment. Really, really a great move on Meta. So AVGO, Broadcom, so a lot of chip pain, but a look at the rest of this world. So let's take a look at some of these other charts here. Look at our sectors. We've got basic materials down a little bit. This is our daily change over here. We had energy down a little bit. Of course, that's going to make sense. Maybe we need less energy if we're not going to be as crazy building all these data centers and sort of kind of going along with that power gen theme. And given that power gen theme, look at utilities. This is not the same kind of utility sector that your father traded, right? This is different now. This is all these big names in here. Let's take a look. You've got the Vistras, which is one of the great movers over the last couple of years, taking a massive hit, down 28% today. But if you look at this, all these sort of companies that have been latching on to the power gen theme, which I really, really like. So this was a little bit of a shocker as well. I've got a couple of picks in there, PWR. So there's definitely some things going on. There's uranium, which I still think is good, but we saw Cameco pull back. We saw NextGen pull back. So definitely this utility sector took a really, really big hit today on this reversal of fortune in AI. Really is what it was. So technology, of course, we would expect is down. Real estate popping a little bit. Look at healthcare. That chart is starting to look really, really good. XLV financials did really, really well. Goldman Sachs, one of my favorites. Treading water a little bit. We've had a great trade on that thing, but it's kind of just kind of petered out a little bit here. I'm looking for some pullbacks in order to add some exposure there. Consumer defensives. So there was a lot of really, really positive stuff going on. And the way I see it is like this. Basically, I think things are going to broaden out. And I don't think the news was that bad in the end, right? Because if AI comes in at a much, much lower cost, that is actually good for the rest of the economy, right? CapEx spend comes down. Of course, the picks and shovels makers are going to get hurt. The ones that we know very well are going to get hit hard. And of course, Microsoft with its investment in OpenAI. But for certain companies, I think it's still, I think it's actually a very, very positive. I think it's positive for the economy overall. The economy is very strong. Employment is very strong. This is actually not a bad thing at all. Now, that, there's for sure, there's a heavy weighting of certain names in the index. So the index is going to take a little bit of a kicking here. If we look at the NASDAQ, look at that. It came down and dipped below here. So I think if there's one area, I think technology continues to be a little question mark unless somebody comes out, Jensen comes out and says this is sort of garbage. And he's prone to do that, right? He came out and talked about quantum the other day. It really, really moved those stocks. They got cut in half the next day. So, but this is a sector where I think there's now a little bit of damage that needs to be repaired. I think the broader market, however, is actually not doing very badly at all. So I think we may see a little bit of a switch here. We've got this equal weight RSP, not the best chart to look at because we do have some names in big cap tech that are still doing well. So I don't think it's necessarily a matter of broad versus high concentration because Meta did well, Amazon hung in there. There are definitely some okay names out there. So maybe not the best one, but overall, things looking just fine. Let's take a look over here. Here's your healthcare. XLV looking really, really good. Bouncing rate came up through here. So I'd be looking at sort of a pullback to maybe this level here, maybe a little bit of a halfway pullback to maybe add some exposure in healthcare. I think it's still looking pretty okay if we are going to have this little bit of a rotation. Here's your financials coming out of this beautiful move. Look at this. We've filled this gap. We had the Trump bump, the give back, and then the Trump bump 2 basically happening right here. And financials did very, very well. And I think, you can see this actually dipped a little bit below there. I think Goldman, one of my favorite stocks, didn't quite get down there. It sort of didn't quite fill the gap and then bounced pretty hard from there. So what did we do today? Did a beautiful trade in the morning. Of course, we're taking a little bit of heat on our NVIDIA position. So we're definitely down a little bit of money there on that finance play. But came in and when I said, I thought this isn't that bad for the overall economy. And I've been wanting to get into Meta. It had that nice breakout over the last few days as we head into earnings this week, which I'm willing to bet on. I'm not normally a massive fan of that, but there are certain strategies that you'll learn in the community that I actually do not mind as much for earnings plays where you can really kind of get a little bit of leverage to a stock moving in the direction that you think it's going to go. So this morning we pulled back. You can see 9:40 a.m. got in here and I said, we pulled all the way back to this trend line. And I said, I've got to get involved here. I've been waiting for this opportunity. So we got in for around even money. We got in for $1.10 debit. And it was worth about $11 by the end of the day. So $1.10, $11 by the end of the day. The other play that we made was in Costco. So I've been looking to pull back. We got some positive news out of Costco the other day, and I've been thinking I'd like to get back in. I think you can't even get a parking spot at Costco. You can never get a freaking shopping cart. The last time I went, I've never seen it busier than that. They're opening new warehouses. This is just a very, very strong name. And if we are rotating back into real things, we saw Home Depot do well. We saw credit cards do well. So we saw a little bit of that rotation out of some of that sort of big cap tech money to some extent and into real things. And I think this is one of the great beneficiaries. So we got into this, and that was a phenomenal trade. Picked up some in the money June 820 calls for $140.50. They closed at 160 something by the end of that. I think even 165. So up almost $2,500 on that one contract. So really, really good, making up for a couple of bad trades out there. We also did a VST trade. So the one I mentioned earlier, very, very popular power play, uranium / couple of other things, Texas power entity. And we're down about $3 on that. So taking a little bit of heat on there, but we gave ourselves a nice distant strike. And I think after sort of a $40, $45 move today to the downside, I think that's an interesting place where if we do at least get a bit of a bounce back, I'm going to turn it into a spread and have it on in a very, very low risk way, recognizing that if we do continue to see volatility in this sector, a spread is really a better way. You start to do those verticals for a credit, you have a nice extra piece that you can play with. If things do get a little bit uglier, volatility expands to the downside, you get that nice bump in implied volatility, and boom, that long leg just starts to really, really print, and you can use that to finance the short leg. So that's one of my favorite plays when volatility is rising in a particular area in general, but in a particular area. So hopefully you guys enjoyed that, and we'll try to get you another update tomorrow or the next day.